I have a question for you. Can a business declare bankrupt even after earning profits? Welcome to my channel. I am Dr. Priyanka, Professor in Finance and the Corporate Trainer. Today, we are going to discuss a very important though often overlooked matter in the business.
Yes, there stood many companies and the groups. Those were earning good profits every year but yet suddenly became bankrupt. This is not a theory or a myth, it's a practical approach which is used by many fortune companies as the key source to their success. In this video, we will discuss about two companies, first Lehman Brothers, secondly Amazon.com. Let's see the Lehman Brothers company. It was very famous and was a global financial company. If you see the net figures from 2005 to 2007, the net profit has increased from $3,191 million to $4,125 million. In 2008, the company had a profit of $2,408 million, but in the same year, they were also declared bankrupt. Well, isn't it strange? After seeing these figures, you must have understood that the profit is not the most important metric to measure the success of the business. In fact, the profit is just one side of the coin. Then what is the another side of the coin? You will discover it soon in this video. If you want to make your business bankruptcy proof, then be with me till last. This is not a motivational lecture, it's a pure finance. Let's look at the income statement. What is net profit? It is revenue minus expenses. Well, this statement includes the cash and the non-cash transactions. As it includes accrued revenue or expenses for which the cash has yet to change the hands. For example, the cash and the credit sale of financial year both are included in income statement. To understand this more deeply, let's see the table. On one side, revenue in the form of the cash sales and the credit sale is given. On the other side, expenses are given. In this table, on the revenue side, there is a cash sales of $10,000, which is the cash inflow. For example, you sell a car for $10,000 and the customer has paid you money at the same time. Other is the credit sale of $20,000. For example, you sold two cars for $20,000, but the customers have given you the post check of 2 months and you will get the payment after 60 days. So this is the credit sales. Therefore, the total sale is 30,000 and on the other hand, the total expenses are 14,000 as an outflow, which include the expenses which are to be paid within a month or 30 days like rent of office, salaries, interest on loan from bank, supplier bill. Now you will see the magic of finance. Profit is $16,000, which is total sale minus total expenses, as I have earlier discussed. But is the profit of $16,000 is equal to the cash of $16,000? Obviously not, because cash from sale operation is just $10,000 and the total expenses are $14,000. So there is a gap of negative $4,000. In Lehman Brothers company example, the company was not able to generate the positive cash from the operations to pay their bills and other expenses. To fill this gap, now what the company or you will do? Just think and comment below. Yes, many of you are correct. Well, to fill this gap, the company will run behind the debt financing through various sources like borrowing money in the form of loans or financial institutions or issuing bonds to the public, and ultimately it will increase your liabilities. In my career, I have come across my number of client companies who fall in such a practical situation. So, what is the solution or the other side of the coin? Well, it is cash generation or the cash flow. Yes, it is cash generation or the cash flow. But obviously, from where it is coming is very important. It's coming from the debt financing or it's coming from the operations of the business, like increase in the sales. Do you know what is cash flow statement? If yes, then comment below. Now listen very carefully. You need to understand what are the sources of funds and what are the uses of funds in the business. What are the sources of funds means that what are the various ways to raise the money. What are the uses of funds means once you raise the funds, how efficiently you are going to utilize them and how much to remain in the business and invest it to. That's where the cash flow statement become very significant to the investors for measuring their risk involved in the company. Now you will ask, what is the risk in the profit making company? Well, there are several risks. Few common risks are listed. Over trading, when a company expands, they own the operations aggressively. Secondly, excessive inventory. Thirdly, non-operating investments. Like firms can have the unutilized assets that do not generate the cash flow currently in the business. Like company owned a factory which they used before for the manufacturing a type of product which is discontinued now. There are some of the basic reasons for deficit of cash in the business. But don't worry, there are various ways to improve these problems, such as negotiate the terms with your supplier. If you have a good trust with your supplier, you can really negotiate for delaying in the payments of bills. Extending 30 days terms to 60 days or 90 days might be more preferable option for them when compared to the risk of losing your business altogether. And it will finally help you to maintain the cash in the business for a long time. Secondly, you can apply the inventory management system like just in time inventory system, which means the raw material are ordered just in time or only when they are required. This helps to avoid the blocking large amount of money in the buying of inventory in bulk. Thirdly, you can also offer discounts for the early payments. We all love incentives. And if we offer customer a discount so they pay their bills ahead of time, we are creating a win-win situation for both of us. By taking the benefit from these tips, believe me, many companies increases their cash flow and become the fortune companies. To understand these and many more factors deeply and apply them practically, we have designed and built many financial courses to help the companies to grow, individuals as well as a firm, from where they can learn and get the practical applicability of the concepts important to run the profitable business. Let's discuss now the another company, Amazon.com, which again clearly shows that the company can survive without profit but not without cash. Look at the figures of Amazon in 2014. The company had a loss of $241 million, which could have meant that company will not run for a longer period of time. But this was not a case, as the profit is just one side of the coin. Let's look more closely. If you see, in same year 2014, the company was able to generate the cash of $6.8 billion from the operations, which means actually they had efficient operations. The survival rate of any company is more if they can fulfill their expenditure commitments on the time and utilize the free cash flow for the business. Along with these problems and solutions discussed in this video, it is also required a detailed forecasting and analysis of cash flow statement to control the variance and track the company cash sources and the uses.
Please do write in the comment box how you face the problem in the cash flow management of your company. And if you like my video, then please like it, share it and subscribe it for my new videos updates. Thank you so much.